Kristin, you already mentioned this, but if you have a lot of money, a long-term horizon, come back to what David said, how do you adjust? It might be premature, but how do you think about adjustments of allocations regionally, structurally, going forward for a long-term, basically pension fund?
Those are great questions. I'd like to come back to the theme of diversification and also about challenging your own assumptions. I think some of the most interesting things that happened at the fund this spring was how people actually started questioning their own beliefs, both around the US, Europe, but also around emerging markets. Because sometimes people, even portfolio managers, they get a little stuck in their ways. And sometimes you have a view of things that might not necessarily be current. And there's always a risk that you stop questioning yourself. And when I heard, I have a very senior portfolio manager, he's a permanent US bull, been for decades. And he said, well, I'm actually changing my mind. Then we had the rates guy who all of a sudden was bullish on the stock market. We had the equity guy who wanted to take down our risk allocation. And we had people who said, like, look, emerging markets are looking much sounder than some of the developed parts of the world. And they started looking into what kind of inflows do you need to the US to sustain the valuations you currently have. And once you start doing that math and you see that the US needs to attract maybe 75% of global savings on a sustained basis to keep valuations high, well, then people start looking around. And I think that's a very healthy way of doing it. And you should let that process run its course, take its time, not do anything too quickly. But definitely I see, and also when I speak to my peers around the world, there are major shifts underway. Yeah. And it comes back to the sort of basic, can we trust US debt the way we did? And then you're really talking about the core parts of the market. So it's a very exciting time to invest. And there's some big questions out there. But as you say, I think there are locations and companies who are very well placed to actually attract that sort of capital. But I think people are, as you say, there's no rush. People are actually quite wisely thinking about, for example, Europe, what's the next leg of the story? You have the defense spending, you have the infrastructure spending, for example, but then you need productivity and you need entrepreneurship to get to the next stage. But we had a visit from Silicon Valley, which was really eye-opening, because it was like, look, Kristin, all you Europeans, you say we have no capital markets and this and that is not functioning. There was nothing in Silicon Valley in the 50s and 60s. There was actually CIA who put money into Stanford to have this incubator of firms, and that was the source of Silicon Valley. So, you'll fix it as you go along. And it was kind of an eye-opening view also of how capital markets actually are developed.